What's up, guys? Welcome back to another episode of Rawstocks. I'm Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and through the rest of the week. Don't forget to check out the description below. There's some links, Traders Helping Traders Discord, where I can be found during market hours, the merch shop, the socials, all that's found in the description. Don't forget to like, subscribe, and share with all your friends. It would really help and support the channel. But let's dive into the charts. We had a nice distribution day to the downside. We'll look at some of the price action as we look at the lower time frames, but you can see a nice down close candle. Big sell-off today. Right, high was up around 210, low was around 195, right about 195 exactly. Trading below the moving averages on the daily time frame. Right, we have our different levels here. Trading below that, took the low of last Monday. Something we were looking at again last week. We talked about trading inside of the weekly range because we had a low on Monday, we had a high on Tuesday. Said we're probably going to trade inside that range. Today we broke the low of Monday. So we broke outside of that range, and we set a new low, at least local low, not lower than the low over here, but right now it's a short-term low, and so we'll be watching that. We do have further downside targets, and we'll look at that as we drop into even the lower time frame charts. But right now, price is significantly oversold and was trading down today. Not normally what we're looking for on a Monday. We're looking for consolidation, accumulation, but because that distribution did not finish out last week, that's why I do think we got that further distribution to the downside. That's something we were looking for last Thursday or even Friday, and it didn't happen. And so distribution finished off today and then kind of consolidated into the end of the session. You can see on the RSI, the reading's significantly oversold. And again, we're trading below the moving averages. On our daily time frame, right now we have the below weekly fair value gap. Right, that is one target. We also have a daily, and it's not marked on here, but a daily fair value gap that we are currently trading inside of, and barely dipped into it today, closed above it. But we are going to draw on liquidity that's inside that fair value gap. Might trade down a little lower. Oftentimes you see that first entrance into the fair value gap and you catch a bounce, and then you come back and further take the rest of that liquidity, maybe even closing it and trading down below. But no surprise that we traded into it and bounced up and closed above it. That's kind of expected on that first go around in the fair value gap. Now we certainly could see a bounce from the liquidity drawn here, see a higher bounce to test some of these moving averages up above some of the levels that we have drawn off as well. Or we could just continue to sell down into that fair value gap. But what we do know about fair value gaps is that they're points of liquidity. And so oftentimes orders are going to sit in there as those fair value gaps get traded into, and that price range becomes balanced. So let's drop into the 1 hour chart or the 4 hour chart. Okay, and we can also see a severely oversold reading. We are starting to catch some divergence. This line here, the divergence line, is actually from the 1 hour chart, but you can see we got a lower low on RSI, slightly higher low on RSI, where price set a lower low. Again, we have our fair value gap here, where we're currently trading inside of and drawing on the liquidity there. So if we look at some of the targets, we have 186.53 being the fair value gap low. We have, 196, almost 197 being the fair value gap open. And then we took this low, so that's going to be off the table. And we took this low, that's off the table as well. And we took that low, so that's off the table as well. All right, so our upside targets on the 4 hour chart, we have wicks, buy side liquidity at 212. We have 214.73, and we have 220.08 being our most near side liquidity targets. We're going to go ahead and also put on today's high, which comes in at 210.63, or roughly 210.87 is what the candle high says on TradingView, but right around that high 210 range. We're also going to put in, even though it's right by where our fair value gap is, we're going to put in today's low being at 194.76. Let's confirm that. 194.67, so pretty close. So we'll have those as our previous day high, previous day low. Previous day low. Previous day high. So we're going to be watching that range, pretty wide range for a Monday candle. So I do anticipate that we'll probably see a lot of trading inside of this range this week as well, similar to last week. Last week we had our low on Monday, our high on Tuesday. So we'll see if this range expands into tomorrow. If we do see a manipulation move to the downside to steal the stops right here, potentially then seeing price move back higher, wouldn't be off the table, wouldn't be an unlikely scenario. Also could see price kind of run up here and try to take the high in a manipulation move, and then we would expect, if that happened, potentially further selling into Wednesday and Thursday. So we'll be watching that very closely. Again, on the 4-hour chart, below all the moving averages, bearish, right? We're in a downtrend, bearish. We are looking for some kind of bottom because of the RSI oversold readings and being so extremely oversold. We are looking for a bottom to be carved out, and we've taken major points of liquidity here in this candle. And we've now traded inside this fair value gap. So we are looking for a bottom to carve out, whether that's tomorrow, whether that's Wednesday with the FOMC. It's going to be happening soon for that bottom to carve out. We're going to be expecting some kind of rally up from there, and then we'll see probably shorts are going to jump on in, maybe up in this 230, 240 range. We have a nice gap between wicks. We also have a large weekly fair value gap. So we could only see this come up to 220, 248 into that fair value gap, steal some liquidity in this wicks, trade up to that fair value gap, and then sell off further from there. All things that we're going to be watching. But tomorrow, specifically being a Tuesday, we're looking for a move of manipulation. So we're looking to see, do we steal the downside, run back up? Do we run all the way up to today's high and then sell off from there? Important things to be watching. If we drop down to the 1-hour chart, we can see on the 1-hour chart, we got above the moving average, the 20 period, right? And then below, we kind of ran a test here on the 50 and the 20. We rejected, came down and set our lows. So we're still below the moving averages, but if we do start to trade up, maybe we do steal that stop real quick, run up, and we get above the 20 period, we'll be looking for that 20 period to curl up and start to offer support. Now, this is a 1-hour time frame, so what we want to do is we want to see somewhere in the AM session, we want to see price get over that 20 period moving average on the 1-hour chart. So maybe that's in the, maybe in the first hour we just see a down wick and a rejection, much like this this candle we saw over on Monday the 23rd. Maybe we see something like that, down wick, steal the stops, trades back up. We get another nice candle that brings us above the 20. So that would be a bullish case scenario. The 50 and the 20 are pretty close. So if we got above, we might see a test, back test of the 20, and then maybe run up into this fair value gap. Something we're going to be watching as well. We have the 200 period moving down. So the longer it takes to get there, we'll see where that 200 period is as price, potentially runs up to test it before we get a bigger sell-off. But right now, that 200 period is inside those wick gaps, inside the weekly bearish fair value gap. And so we do anticipate at some point in time we're going to be coming up and testing these levels inside this pink box or this red box, and potentially testing this 200 period moving average on the 1-hour chart, where we would anticipate that price would sell down and eventually target this 1-week fair value gap down below in the 260 to 240 range. So if we drop down into the 15-minute chart, this is the chart I often reference when I'm day trading on the 1-minute chart. But if you look at today's price action, you do see we opened gap up. We ran right at this high of this wick here. There's actually equal highs between these wicks here. So what we know about equal highs is that they will get taken eventually. So we are also flirting with the 20 period on the 15-minute chart. We set a lower low, higher low here. So we'll see if that holds. Right, we kind of just consolidated into close. But if we get either a flat open or a gap open, maybe a quick move down to steal stops the move of manipulation, right, and get back above this 20 period moving average on the 15-minute chart. Again, we could see it test the 50 period, back test the 20, run up into the 200 here, and then hopefully trade above, maybe even going into Wednesday's session. So we'll be watching that as well with those moving averages. But right now we got our previous day low, our previous day high. This is no longer a previous day high. This is buy side liquidity, and that was from Friday's high. Then we also have this rejection wick in this candle, which is also buy side liquidity. Then we have further buy side liquidity before we get to that fair value gap above. So we have plenty of targets to the up and the down. To the downside, we have today's low. We have 186.53 even further down. There's not a lot. We've taken so much liquidity to the downside. If we pull back out to the daily chart and we look at our different liquidity levels, right? We had this candle, order block, and wick, took it. Right? We had plenty of fair value gaps here. We've taken all of those out completely, closed them out. Right, we do have this. We had this wick here today, which I did not have on the charts, and I should have, but we took that wick low as well, just by a couple ticks, and then now we're inside this bigger fair value gap, or we traded into it today. So below that, I mean, there's not a whole lot left to take as far as liquidity. We got the fair value gap, we got some sell side liquidity right there. We have lower levels here, right, and so as we start to approach those, let's label this sell side liquidity. Okay, so we got our fair value gap, we got sell side liquidity, we got further sell side liquidity, right? And then we got that weekly fair value gap. So we've taken so much of the available liquidity as we sold down that it would be likely somewhere in this fair value gap, whether it's, immediate or not, that we do start to see some kind of rally back to the upside to take some of these buy side targets, right, to clear out some of the buy side liquidity and then see a further push down. I don't think we have the oomph to just keep on dropping like we've been dropping. So some of you guys asked why I went into calls today. I got a little ambitious. I didn't buy a lot, but was trying to grab a potential low, because I am expecting even a minor rally back up above 200, maybe into the low 200s, maybe 210, 215. Whether that happens this week, I don't know. The FOMC certainly has the ability to cause the market to drop based on whatever they come out with their meeting. But I do still expect that we start to see some kind of upward movement to take out additional buy-side liquidity before we drop even further. So again, we'll drop back down into the lower time frame charts. We got the 5-minute chart here. And on the 5-minute chart, you can also see we're flirting with the moving averages. Okay, we got above the 50, above the 20 period, just barely into close, right? We took it out. We tested it. We came back down. We took it out. We came back down, tested it. We saw one candle rally. We got slapped back down a little bit in the final 5 minutes. But if we can hold that and stay above it, even if we dump real quick to grab the stops and then run from there, right? Up here at 204, we have a declining 200 period moving average, so that could be a likely target. Inside here, we have some short-term fair value gaps here and here, right? So this is at 201.55 to 202.89. So that could be a fair value gap target as well. Maybe we only get a brief rally above 200 and then we sell off from there. So anything's possible, but we need to know what those targets are and those likely spots that we return to. We know that fair value gaps are magnetic, but we have fair value gaps on both sides of the tape here, on the bearish and bullish side. So which one are we going to draw into? Again, the fact that we drew into the fair value gap below today on a daily time frame says that we have a higher likelihood of starting to target some of the upper buy side liquidity or above fair value gaps. And then if we look at the 1-minute chart, gives us a really clear indication of what happened today. Again, we got that continuation to the downside. I was pointing out earlier on the Discord just a few minutes ago that if you're using quarterly theory, it doesn't have to be just in days. So I want to show you guys this. This is our consolidation. We got a move of manipulation, and then we got distribution that occurred. And this is what we were looking for last week, although we ended up range bound. The distribution happened today, continued to the downside, finished that move, right? And then we kind of saw consolidation, even though we set a higher high. If you look at the PM session or the end of day, we had a kind of a larger range consolidation, if you will, looking at that. So Mondays are often an accumulation stage. Even though we got the distribution, now we are seeing some accumulation here into the end of the trading day. And so on Tuesday, after accumulation, we're looking for manipulation. So does that end up again being a strike to the downside, steal the stops that were in this low, and then reject hard and quick and start to run up into Tuesday, potentially even into Wednesday with FOMC. And then with FOMC, it'll make a decision whether we want to go higher or lower. Okay, the manipulation can also occur to the upside, but the fact that our previous day high or today's high is all the way up at 210.88, I don't really think that our manipulation move is going to be to take that high and then sell off all in one day, although it could happen. I mean, we sold off today, and that was pretty catastrophic. So we could see it just give us a giant cup and handle, rally all the way up here. That be the manipulation. Everybody thinks it's bullish because we're back up at Monday's high. And then, bam, we get slapped back down to FOMC, Thursday distribution, right, and come back down and test the lows. It's possible. I don't know if it's probable. I think the more likely scenario would be a run on the stops of today's low and then see it rip back up on Wednesday into FOMC, and then FOMC will be the catalyst to determine, do we start to head higher from there, or do we get slapped back down based on whatever the Fed comes out and says. We know that Wednesday is probably going to be volatile. If you're not an advanced trader, you're not used to trading volatile days like FOMC, I'd consider taking a back seat and just watching, or maybe even paper trading if you have a paper trade account, just so you get some exposure, because they can be a rough and wild ride. I know on a previous FOMC day, we were in some short positions that ended up rallying into the meeting, which ended up getting slapped back down and ended up turning a huge profit. But it got really dicey because those calls went deep negative, out of the money until that FOMC event happened. So you never know what's going to happen on those FOMC days. So protect yourself. If you are trading with live money, maybe consider managing your risk and not trading with large positions, because if it starts moving in a direction against you, fat chance that you're going to see recovery into Thursday and Friday. So I hope this has been an insightful video. Again, don't forget to smash the like, subscribe, share with all your friends. Appreciate all the support. Drop a comment if you will. Let me know, what do you guys think about FOMC? You think we're going to go up? You think we're going to go down? Drop it in the comments below. And again, thanks for the support. We'll see you guys on the next one.